ESG. You've probably been hearing that acronym a lot lately, right? Environmental, social, and governance. But why has it suddenly become such a huge deal for pretty much every company out there? Well, today we're going to break it all down, using a guide from the Pearce Sustainability Consulting Group to find out what's really going on.
All right, let's just jump right in, shall we? Let's talk about the one big question that's probably keeping a lot of business leaders up at night. And honestly, it's a question that gets to the very core of whether a business is going to survive in the long run.
And the answer? Well, it sounds simple, but actually delivering on it, that's the tricky part. They want proof. That's it. Proof that your business is resilient, that you're ethical, and that you're built for the future. You see, it's not just about the bottom line anymore. It's about your total impact. And trust me on this, everyone is watching.
Okay, so that brings us to our first section, the new business imperative. Seriously, why is this so urgent all of a sudden? Let's dig into how ESG went from being this, kind of niche thing for green companies to something that's now a make-or-break issue for everybody.
First up, and this is no surprise, you've got to follow the money. I mean, ESG ratings aren't just some tiny footnote anymore. They're front and center in major investment decisions. Just think about giants like BlackRock. They are literally using ESG metrics to screen their investments. And hey, when the biggest asset manager on the planet makes a move like that, the signal couldn't be clearer. A good ESG profile tells them you're managing your business well.
And it's not just investors. Governments are getting in on the action too. That regulatory net, it's tightening all over the world. You've got Europe's Corporate Sustainability Reporting Directive, or CSRD, which demands some seriously detailed reporting. Meanwhile, over in the US, the SEC is rolling out its own climate rules. The bottom line is, this isn't optional anymore, and the penalties for not keeping up, they're no joke.
And finally, there's us, the customers. This quote right here really nails it. Your company's values are now a huge part of your brand. I mean, think about a company like Patagonia. Their whole identity is built around their commitment to sustainability, and people are fiercely loyal because of it. A high ESG rating builds that kind of trust, and in today's market, trust is everything.
All right, next up, decoding ESG risk. To really get a handle on this, we need to move past the acronym and get specific. So what are the actual real-world risks we're talking about when we say E, S, and G? Let's break it down. First, the E, environmental. This is all about your direct footprint on the planet. We're talking about your carbon emissions, sure, but also how prepared you are for things like extreme weather. How smart are you with your water and energy use? What do you do with your waste? These aren't just feel-good issues. These are real operational and financial risks to your business.
Then we have S for social, and this one is all about people. Your relationship with society, simple questions really, but they have huge implications. How do you treat your own employees? Is your workplace safe, fair, and diverse? How do you show up in your local community? And a really big one, are you absolutely sure your entire supply chain is ethical?
And that brings us to G, governance. Think of this as the operating system for your company. It's the framework that makes sure everything runs properly. Are there real checks and balances to prevent corruption? Does your board have different voices to make smart calls? Is executive pay actually tied to long-term success? Good governance is basically the foundation that keeps the whole house from falling down.
Okay, and when you put it all side by side like this, the difference is just, wow, so clear. A low ESG rating, that's a huge red flag for risk. We're talking financial trouble, legal headaches, a damaged reputation. But a high rating, that's all about opportunity. It's a green light for investors, it opens doors to new markets, and it builds that rock-solid customer loyalty. The choice seems pretty obvious, right?
All right, Section 3, the high rating payoff. So we've seen the downside of a low rating. Now let's flip that coin. What's the actual tangible payoff for companies that really nail this ESG thing?
And here's the key. A great ESG score isn't just about playing defense, avoiding bad press. It's an offensive tool. It helps you get access to more capital. It can literally lower your operating costs. And, this is a big one, in the battle to hire the best people, it makes you a total magnet for top talent.
So this is all great in theory, but now for the practical part. Section 4 is your improvement playbook, because it's one thing to know why this is important, but how do you actually do it? How do you improve your rating? Let's get into the game plan.
The foundation for everything else is something called a materiality assessment. It sounds fancy, but it's really a smart three-step process to figure out what actually matters for your business. Step 1, you talk to everyone, investors, employees, customers, and find out what they care about. Step 2, you look at your competitors and see how you stack up. And step 3, you take all that info and prioritize so you can focus your time and money where it's going to make the biggest difference.
Okay, so once you know your priorities, long-term success really comes down to a few key things. You have to set real, measurable goals. Not just, we want to be better, but we will cut emissions by 30%. Then, you've got to be transparent and report your data. Show your work. Super important is getting the board involved. There has to be accountability at the top. And finally, the really smart companies are using tech, even AI, to keep an eye on risks and track their progress in real time.
And here we are, our final section, building a resilient future. We've covered the risks, the rewards, the playbook. So what's the big picture here? What does all this really mean when we look ahead? And this really says it all, doesn't it? ESG is not a fad. It's not a nice-to-have or some side project for the marketing team. It is now an absolutely essential part of core business strategy. I mean, look at companies like Unilever or Tesla. They're not just getting lucky. They have baked sustainability right into the DNA of their business. And that is exactly how they're building for the long haul. So, that leaves us with one last question, a big one for you to think about. When you look at your own organization, at your own strategy, is it stuck in the past? Or is it truly built to be resilient, to adapt, and to grab the opportunities of the future? Something to think about.